Morning, 20 past 6 on Monday morning. Here we go. Looking at the stock market, it's been a bit of action, getting certainly more volatile. You can see that from this daily chart. This run up here is all fairly under control. Even the pullback here was fairly under control. But in recent weeks, really, the volatility has been increasing. And that, as you probably remember from previous videos of mine, can often be just the beginning, the hint of the fact that the markets might be on the turn. Now, the next stage for me would be waiting for a pattern to tell me that they're on the turn, such as double top or head and shoulders. And who knows whether that will develop or not. We're nowhere particularly near it yet. But when you look at the weekly chart here, there are also indications that there's weakness setting in. What's going on here? Just close that down. Weakness setting in. Now, what I really want to do is expand this up, and let's have a good look at these weekly candles just to give you the insight. So more recently, we have been getting negative candles just creeping in. So, for example, actually, let's shrink this a wee bit. So you can see, running up, everything was all right until we get to sort of this area. Now, that's not a bearish engulfing candle, although this certainly is a hammer, not quite a bearish engulfing candle because the body is within the previous candle body, but still getting a bit negative. Anyway, we carried on up, so that wasn't a big deal. This isn't quite a bearish engulfing candle, but it did lead to quite significant losses. This is a bearish engulfing candle on the weekly chart. Nevertheless, we managed to push higher, significantly higher, new all-time high, followed by another bearish engulfing candle. Okay, not much of a setback. We had to go again, a little bit of a negative candle here, and now another bearish engulfing candle. I just get the feeling that this series of candles is just starting to give us a clue that weakness is setting in what are clearly overbought conditions on the weekly chart. And just for the sake of comparison, I've gone on the weekly chart quite a way back, and it's not common to see these sort of negative candles when the market's in a very clear bull trend. And now there was a bearish engulfing candle, and the market did sink quite significantly from that. So it did trigger a decent correction, but nothing too serious. Obviously, the move was easily caught by the 200-day moving average. We bounced off that, and then this time the 100 week. I'm sorry, we're looking at the weekly chart. The 100-week moving average. The yellow line and even the 50-week moving average, the red line, pretty much caught that any future correction, and then we took off. Obviously, we had this must have been a COVID scare when the market did tumble quite out of the blue almost. I remember that actually, wondering why it was taking so long for the market to react to the COVID thing. Anyway, we did collapse quite significantly, and of course, ever since then, we've just gone up. Now, slight bearish engulfing candle there. Not quite one there, but as you see, not many negative candles at all, and yet now we're seeing more of them. So I think it's definitely a word of caution. So would I be getting into a short position now? I think it's probably a little bit premature. We are still in a very strong bull trend, and whilst some of those candles might be early warnings, might be a bit too brave to get into a short position, what I would want to see now is a small topping pattern. By which I mean, let me try and give you an idea of what could happen, what I would be on the lookout for. Let's see. So we could continue down to this trend line here, which is also the 100-day moving average. You can see the yellow line there, the 100-day moving average. Now, if we bounced off there and started doing something like this, and just dithering a bit, and then started to come down, then we would, you guessed it, we would have something like a head and shoulders pattern, which we could then start talking about something, this would trigger a sell signal on a break below here, and then we could see something more significant to the downside. But until then, probably too risky to try and pick a top on something without at least a pattern. But anyway, it's just an early warning there for you that maybe if you're aggressively long, might want to take some chips off the table and just see how these things develop. Nasdaq may be looking a little bit more negative than the S&P. Because we seem to be breaking down, well, we may have broken those lows, but the trend line will still be holding there. So again, more of a sideways consolidation really than a sell signal. But for some reason, I'm just feeling a little bit wary. Let's just have a look at the weekly chart. What have we got to see on here? Scale that. There we go, scale it and blow it up. Bearish engulfing candle there. Not quite a bearish engulfing candle there, but not far off it. It's a series of big red candles followed by big green candles. So you can clearly see there is becoming more of a the bulls don't have it all their own way. Over the last, say, what's that, 6 weeks? The bulls have not had it all their own way. And whilst they do fight back when the market takes a dip, the following week you're seeing a significant sell-off. So if you're an investor, a long-term investor, or a trader who's holding a long position, expecting the market to remain in a bull trend, you're going to be maybe a little bit sweaty at the moment. And if you've been buying, if those bulls have been buying on those green days, well, right now they're underwater, of course, so they're going to be feeling a little bit pressured. We're trading below the previous all-time high, which is at 15,696 on the cash market. So just slightly negative tone to the market. Obviously, we haven't had a serious collapse. We're not even testing the 50-day moving average. 50-week moving average. We're nowhere near it. Where are we on the moving averages on the daily chart? That's slightly more negative there. You see, look, trading below the 50, trading below the 100. Not something that this market will do very often, hold below the 100-day moving average, not for a significant period of time. So we'll see how long this lasts. But as you can see, some negativity creeping in. So I'm just a little bit cautious. Selling into short positions is still a bit risky at this stage. Let's have a look at the Dow Jones. Now, let's start with a weekly chart. Weekly chart, there we go. Okay, don't really have those negative candles, the big red bodied candles that we're seeing in the other markets. So this is a little bit of better news for the bulls in this market. I wouldn't see any particular reason to be getting short of this one. And the daily chart, no particular negative pattern. No, not at all. Trading above the moving averages of 50, 100, and 200. So this is looking a bit more positive. Actually, let's just go back to the S&P and see where we were with those moving averages. I don't think I took particular note of them. Trading around the 50-day moving average on the daily chart, so nothing too significant. Okay, there you go. Just I've got my eyes peeled for any negative patterns that would want to trigger me into a short position, but we're not quite there yet. However, worth looking also at the German markets. Where are we? Germany 40. Now then, potential double top, I could argue, especially when we have a kind of shooting star candle on the weekly chart on a retest of the previous all-time high. So that's something to be aware of, something a little bit negative. If I just blow up the daily chart here, I can join the peaks to indicate that this could well be a double top. Now, a double top is not actually confirmed until you break the neckline. Oops, that's not what I wanted at all. Until you actually break the neckline or the low of the double top pattern. That's actually when the confirmation is made. That's when you know what I'm trying to do. For some reason, it's not happening today. I'm just trying to join those two peaks to show you that tonight it could be a nice double top pattern, but really the double top's not really confirmed until you break 15,000, and that's when you're looking for a dip of sort of 1,240 points from there. In the meantime, we may just be in a sideways channel. As I say, the candles on the weekly chart are not particularly negative. So, I guess if I was to summarize this, I'm probably looking for a consolidation phase more than moves to the downside just yet. Now, the DAX could easily come and test these moving averages, which are sort of around 15,700, 15,600. That's the 100 and the 200. And if we continue lower, we'll be around the 15,000 area. But even that would only be a 1,200 point correction, nothing significant at all. And then we could continue higher. So, for those of you who think we're about to crash, and I know there's lots of people out there who just cannot stop themselves being short these markets, and I'm not one that's encouraged that at all. But just be aware that there might be some downside, but playing the short game is still very, very dangerous. WTI crude, it's entirely possible that we're building a head and shoulders pattern, but again, we're way off the neckline, which is around $63, so we would have to fall $15 before we completed that. So at this stage, it's probably just a consolidation phase. Minor negative candle on Friday, so we may start to turn lower. You can probably see it better on the weekly chart, actually. There's your neckline. Looks a bit more clear cut, doesn't it, on the weekly chart? Your right shoulder, your head, and possibly, sorry, your left shoulder. Can't tell my left from my right. Your left shoulder, your head, and your right shoulder possibly forming if the market turns around from the 78.6% Fibonacci resistance level, and we're yet to see whether that will actually happen. Okay, that's it for me on the stock markets and gold. I'm going to whiz through the Forex markets, and I might do you another video if there's anything important to show you. Otherwise, I'll catch up with you again tomorrow morning. Thanks for joining me.